Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Welcome back. It is Sarah Larby. You are listening to Where Should I Invest? Today's guest is Cody Yeh, who is a real estate investor, but also trades stocks and options and does some investing on that as well. Cody came to Canada when he was 18 from Taiwan. He came to study here in school, and then what happened is he quit his six-figure job after he graduated and got a good job. He quit that. He was an engineer, and he started to really focus on trading, real estate, and all that good stuff. And we have a great conversation. In terms of real estate investing, this is not so much about real estate investing, but just, looking outside and investing in general. And Cody has done really well. He was able to leave the 9-to-5 job by focusing on investing in general and not being an entrepreneur, and has been very successful, and currently today teaches others how to do that as well. So hope you enjoy the podcast. Cody, welcome to the show. How are you?
Good. Catch me when I'm drinking water. I'm doing fine. I'm doing really well. Thanks for having me.
All good. All good. So I'm really inspired by your story. And, I would only ask this because you are so young, but how old are you?
I just turned 30.
Very cool. And give us, an overview of, being 30, what you've accomplished. And 30, you're basically, retired. You've got a ton of amazing success. Give us some insights or maybe a little bit of information on who you are.
Yeah. So my name is Cody Yeh. Came from Taiwan. Came with a student visa at age of 18. Went into mechanical engineering at one of the well-known school in Toronto, University of Toronto. Grind my way through it. Went through 16 months of internship at Honda, working as a project engineer. I ended up going back there. And then the reason why I went back there is because I know there's a lot of potential for overtime to really racking a lot of money. And that will give me the initial down payment to buy my first house, right? So I got my first house in 2016, not under my own name. My mom wants to buy one in Toronto, where around Yonge and Eglinton, where the LRT is coming up. So I say, here's 30 to 50,000. I want part of it, right? Back then was $500,000. Now it's, 900 to $1 million, right? So I bought the second house in 2017, and then third, the fourth in 2019, right? All under my own name now. So that was a right? I started as an engineer, worked as a project manager. But while I was working as a project manager full-time at Honda, I know there's more to it than just working for 30 years, right? So I stumbled upon a real estate investing. I know, and really anywhere in the world, 90% of the millionaires really came from real estate, right? So I say I got to get into that. So I drive around, go to all the seminars I can get to, listen to all the podcasts, including yours. Maybe not at that time yet, but once you have yours, and I listen to it as well while I'm driving. I used to commute a lot, right? 1 hour one way at a point of time. And whenever I'm not attending any real estate seminar, I am actually doing day trading at night for the Asian market. So that's the only way I can work from 7 to 5, go home, prepare, and I trade at night for, prepare for an hour or two. I trade for another hour or two, and then I write report and I draw out lines, all the charts, whatever those looks like, write report on why was I doing that? Was that a good decision? And then I did that for 2 years before I just quit my job. And, at that time I have already been practicing, a more passive way of trading stock and option. So before I quit, I actually replace my 6-figure income. So that gave me the leap of faith. And then I think I can build something bigger. I quit last year, January 2020, without knowing the COVID. I saw the COVID in Asia, but I didn't know it was going to turn out like this, right? So couldn't, never look back. And thank God it's been working really well. So
Very cool. I mean, you've got an inspiring story, and I wanted to bring you on because you do both real estate and investing in paper assets. And, it doesn't always have to be one or the other. I think it's just important to, look at it as a whole and then make your decisions. And that's why I wanted to have you come on, because you've been successful as an investor. You've also been successful with trading. Now, I'll tell you, I don't know a whole lot about it, and I won't pretend that I know a whole lot about it because that's not my style. But I wanted to bring you on because I think that what you're doing is really cool, and also mixing in the real estate investing piece, and just to get your side of it. What are some pros and cons, if you could share, between, let's just call it real estate as an asset, and then paper stocks and trading as a type of investment?
Yeah, great question. A very loaded question. And just first of all, disclaimer, I only share the things I do. So if I don't do it, I don't share it. I won't say I heard it from here, I think it works. No, I'm not that type of person, just like you know me, right? So from my perspective, from what I've seen, is real estate, depending on where you are, but where I am is in Toronto, North York, right? So to me, a Toronto, kind of like a radian of 1 hour to 1.5 hour drive, we can still get a good cash flow. And because of the fundamental, right, all the migration, immigration, GDP, diversify, industry, all that, everything still points to a really good long-term growth. So I think real estate is still the pillar of how I build wealth, right? So in real estate, we always, a lot of people say, hey, real estate cash flow is king. But the truth is, only from my perspective, is cash flow in real estate is very minimum. Okay, any of my legal duplex, after I subtract everything, and to be real, is only $300 to $500. I don't manage myself, right? I put in vacancy rate, fee, and all that. So it's only $300 to $500, but I have a lot of money sitting there, right? Of course, I try to pull the L out, but it's not a good cash flow, good enough cash flow vehicle for me, right? So we're on the other side. A lot of real estate investors don't like stock, or don't like option, or a lot of stock option investors don't like real estate, right? So because I did both, I'm still doing both. I'm actually teaching stock and option, right? So that's why I think I can confidently speak to it. And stock and option can help you cash flow a lot better, right? So a lot of my students, including myself, we have a kind of like a target, my hit and my misses. Sometimes we go way over, sometimes we go a little under, but we have a 4% per month, kind of roughly. So that's almost 40 to 50%. Of course, depending on the market, 2020 has been an odd year, but imagine 4% and you have, let's say, $100,000, you can only buy one house. Okay. And you do your BRRRR, maybe altogether you need 200,000, right? And then you pull out, half of it or 3/4 of it, but you leave some in. But imagine if you only have, let's say $100,000, right? In a real estate, the cash flow you $300 to $500, right? But if you have 4% out of that $100,000, how much that is? That's almost like $4,000 per month, right? 4%, right? $4,000 per month. And that is a lot, 10 times more than $300 to $500, right? Just based on the math. Again, there's up and down, but average out, that's what we're getting. And, this is not to replace real estate, not to replace, don't do what I do. Like you just go quit your job because you think this can replace it, right? Unless you really have something else lined up, right? But this could be a good way for people who have a 9-to-5 job, already invest in real estate, and you ran out of money. Instead of going to JV, right, joint venture, or instead of going through creative financing, you can actually use, take the money you're saving right now and then increase the speed of that down payment accumulation. And then you can buy your next house or your next rental properties faster, or even buy your first ever home faster, right? Using this method. So they go really hand in hand with real estate, whether you already have one or not, you're still getting into one, right? This can speed up the saving for your next down payment. And if you already have it, you say, hey, I have a high net worth, then this could be a way where, you only spend less than 30 minutes per day on stock option trading on your phone. And hey, if you have a big nest egg, and you can actually generate a lot of cash flow. You don't have to sell your real estate. You don't have to, dip into your nest egg, right?
I mean, that's a big thing that you're saying. And like, I will say, like, caution, as well, because obviously you've got the hang of it. You know what you're doing. I feel like I would have no idea where to even start. But I also, and I think sometimes it's what you don't know that could be a risk, right? I'm actually pretty conservative in the grand scheme of things. So,
Correct.
do I do a little bit of stuff at Questrade? Do I do a little bit of, like it's fun money if I lose it, it's not the end of the world. Most of my like registered fund, as an example, gets loaned out to investors for mortgages. So that's actually what I do. And then you can kind of dictate your rate, which for me, it's worked out well. But I wanted to bring you on because it's just another way to look at things. And again, everybody that's at home or listening to this, I would just say definitely do your due diligence. Everybody, can have a different story, a good story, a bad story. Not to take anything away from you, but it's just important that somebody that's listening to this does their own due diligence and that kind of stuff. So, when you're saying you can increase the cash to be able to buy the next property, and you're comparing it to buy and hold, which is cool, but when you do the BRRRR and you turn your tenants over, like your cash flow can increase. And when you do the shorter, medium term or different things like that, there's lots of ways that you can increase that cash flow. But for you, just like when you were looking at, full-time job and what you're doing. So I'm just curious, like, okay, so let's just say, for example, I'm just going to put it out there. Let's just say, let's just come up with a number, 50 grand. And I want to understand how I can make that money grow, not in real estate, but in paper assets. Like, what are some of the things that you can tell somebody on this podcast on some of the things that they should consider with that money from a paper asset trading perspective?
Yeah, it's funny how you mentioned that $50,000 because my free webinar I ran last Wednesday, where there's 270 people sign up, 160 people show up. And at the end, I said, if you stay until the end, I know there's more advanced people. I will show you one of my account has $50,000 Canadian, exact number was the performance for December. So without jinxing it, because this podcast is going to come out months later, but that was a 6.25%. So that's 6.25% generating around $3,000 cash flow. Again, could be more, it could be less, but that was December, right? I didn't pick the best month of November. I didn't pick the average month of January, but I just kind of average of December. Now, for people who are, who say, hey, I have $50,000 now, I'm kind of in between. I can't really buy in the next house. I don't want to do the JV. What should I do with this $50,000 to get up to the next down payment, right? If you really want to diversify, a lot of my my clients where we invest together, those people are big time real estate investors. They just say, Cody, I want to diversify. I want to have a little bit more liquidity, right? And I want more cash flow. I am doing development project. It's locked in for 5 years. Yes, I know I can get millions down the road, but it's kind of scary. I'm not sure if it's going to flip upside down if all of a sudden something happens, right? So $50,000, my track record, I can get 3,000, but not everyone's like that. Whoever went through my course, there's people getting more than me, but I'm not the advocate of getting the most return. To me, I'm very risk averse. I'm just like yourself. For me, when I'm buying a real estate or I am investing in stock or option, I always think about what's the worst thing that can happen to me. I look at that worst case, right? So in this case, right, because I do wholesaling, I partner with one of the biggest wholesaler in the Simcoe County, which is north of Toronto, right? So we always want to buy a good asset. We still want to buy at a discount, right? So because if we can buy at a discount, that is the buffer to our downside risk. So the lower we can get it at, the more cash flow we get, the more room we have for the market to move down before we are really losing money, right? So same thing in the stock and option strategy I'm teaching is we only agree, okay, to buy a stock we want to buy anyway. For example, not stock advice, but I use Apple. I like Apple. So I say, I want to buy Apple stock. Right now it's at 130, for example. Okay. I want to buy Apple anyway, but you know what? I want to get it cheap. I want to get an off-market deal, right? It's really hot. Everyone's talking about, I want to get an off-market deal, right? Imagine right now, Apple's at 130, but I can say, hey, you know what? I will sell an insurance contract, right? Instead of paying interest, now I'm the insurance company, okay? I can sell someone on the other side. I don't know who that is. I can sell him a contract and say, hey, if Apple goes below, let's say 120, right? Right now it's 130. If it goes below 120 in 30 days, then I will buy Apple. I will buy 100 shares of Apple because I want that stock anyway. Now I can get it at a discount. And because in exchange, you actually pay me, let's say $300 for it, $400 USD for that contract. But for me, it's the worst case is I could pay $400, and then the worst case is I buy Apple at a discount price, 10% discount, right? So same thing in real estate. If you buy off-market deal, right? I know this is kind of like never happened in the world, but if I can walk to my neighbor and say, hey, I know you're afraid your house might go down 10%, you're going to retirement. Do you mind paying me $10,000 if your house go down by 10% next year by 3 appraisal? Okay, if it's agreed, went down by 10%, I will keep my $10,000. I will buy your house at 10% discount, and you can walk away, right? But if your house price did not go down, right, or go down only by 9%, or stays the same, or even go up, I keep the 10%, and I keep going on to different neighbors and start trying to, sell them this insurance contract, right? So this is exactly how I teach and what I do in stock option. Like, to me, it's actually lower risk than buying the stocks outright. Like, same thing, like to you, like it's probably less risky to buy off market deal than buying on market deal, because you get a little bit discount. There's already equity in there, right? But in real estate, that's your equity. But in stock option, I even get paid on top of that. I get paid a couple $100 for selling that insurance contract. Does that make sense?
Yeah, I mean it does. So it sounds like stock options for you anyways are what really helped you versus just buying stocks and just letting the market do its thing. So it's essentially looking at a stock now and offering that if it goes down, then you're going to, buy it at that price. Is that summary correct? Yeah.
And I get paid to wait, right? If the stock doesn't go down that much, I still keep the money, I get paid, keep the premium, I get paid. If the stock stays the same, I keep it. The stock goes up, I keep it as well, right?
So is this good in any market? Like, let's just say the stock market is starting to take a tumble versus the stock market is doing really well. Like, is there different strategies that you utilize in one versus the other?
Very good question, Sarah. And let me bounce that question back to you. If you buy real estate, all of a sudden there's a down market. Did you do anything to your real estate?
No.
No, same thing. Because here's what I learned from day trading. Because here's why a lot of people lose money trading stocks or trading options. It's because they have too much control, too much liquidity. It's because you have too much freedom to sell or buy that asset in a short amount of time. If right now I go into my phone, I can sell all my position in a second, right? But in real estate, right, if the real estate market goes down, hey, this is still a good market in the long term. You did all your fundamental analysis, right? Based on GDP, interest rate, blah, 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 right? You already know this is the area you want to hold long term, okay? So if the market comes down, I think based on your strategy, based on BRRRR, your cash flow is positive, right? You already put in a buffer. So on a monthly basis, you will not get pinched because of cash flow. So you will hold it for long term until it come back up again, right? I have the same mentality in stock and option. So back in March, when everyone's panic selling, right? I was actually picking up a lot of cheap stocks, right? Good cheap stocks. So I do the same fundamental analysis on my stocks, like exactly the way I look at real estate, right? So I look at whether a company has been consistently making money, making more money for the past 5 years. How do they react in the past 2 recessions, right? In 2018, 2009, how do they do, right? Did they get impacted, right? Do they have a lot of cash reserve? Just like in real estate, do they have at least 6 months reserve funds, right? And how's their management, right? And how do they, are they constantly innovating, right, to catch on the trend, right? That's all the things I look at. Same as stock market, same as real estate market, right? So I do all my homework, but now for me is I get paid to wait until I can buy a stock at a discount. All of a sudden now the market turned on me. I know good stock, comes down fast, but it goes up a lot fast as well and go even higher, because good company will come out from recession even stronger. Because this is what I see a lot of time during recession, right? For example, Apple, they have $200 billion sitting on the side. Okay, so now that the market dipped by, let's say 30%, now they want to buy back their own share because they have confidence in their own share. They want to buy it back. So it becomes more valuable for their shareholders, right? At the same note, they go out and try to buy out their competitors, all the small company. They usually have to pay $1 billion, but now they say, we know you're hurting. We know you lost a lot of customer. Why not I bring you under my wings for $500 million, right? So they just go out and pick up all those stuff. So they come out of recession even stronger, right? And that's what the company I look for are those big guys that know what they're doing, will take advantage of it, right? And to really come back to that question is, do I do anything during market downturn? A lot of time, it's against human nature to be greedy when others are fearful, and be fearful when others are greedy. When the market kept going up, you have to be fearful of it. It's not going to continue up forever. It might have a correction, right? Same in real estate. When it actually dipped down, and that's when you should actually buy more, because those are good time when the market is quiet, no bidding wars. You should actually get more if you have belief, you did your homework. You're not just average Joe, right? You did your homework. Same thing in the stock market. I'm not trying to play both ways, but I just want to buy a good stock, I buy a good business at a discount. And that's all I'm trying to do. So now the same business, like after COVID, nothing really changed within that month, but the valuation dropped by 30%. So to me, I can get it for really cheap, right? Wouldn't you do the same thing if house in Brantford dropped by 30%, but nothing else really changed? Like just for example, within a month, but nothing really changed, right? Would you try to pick up more?
Yeah, no, for sure. I mean, real estate's something I understand. So I mean, just like this is the stuff you understand, so it makes sense. So here's a question, because you clearly know a lot. And I'm always about some of the free options first, right? Just like real estate, there's podcasts, there's books that people can read and start learning. And then, until they really need, there's still a lot of resources available. So what are some of the things that you did in the beginning that helped you get to where you are today? And then can you share any free resources?
Again, great question. It's a loaded question. I think I cannot discount anything I went through for the past 10 years to get me where I am today. It's not an event where, hey, now people see, hey, you wear a Say Yeah hat, that's your brand, you look like you're successful, whatever. But that's just one event. People don't see the process of me driving an hour one way, and I drive from like Barrie area to, let's say, Hamilton to look at some houses. I drive to East Side to some other seminars. I go everywhere, right? And then I put in a lot of time, and I was doing day trading as a second job at night to get to where I am. And whatever I'm not doing those, I'm actually reading a lot of books, right? Whether that's stocks books or just business books or real estate investing books, right? So there's so many good books out there, but a lot of time it's not like people always knows a lot of good book, but they buy the book, they put it on the table, they don't really read it. But for me, it's not about what's the next book I should read. I line it up and I just allocate a time in my day. I say, currently I read 5 books every day, right? But it's not like crazy. I read the entire book, but I allocate 30 minutes for each book. One of it is business, one of it's real estate, one is personal development, right? And I constantly get a very good idea, right? New ideas, and constantly make sure I'm in the right direction, right? So that's where I keep all the positivity, like keep it real, right? And then I'm keep taking action, right? So
are there any specific resources, like any specific books that you've read in the beginning that you can recommend if somebody wants to just at least learn a little bit without just diving into it right away, just to have a little bit of a grasp?
Yeah, yeah, definitely. There's a very easy to read book. It's called Money for Nothing. I know the author is called Derek Foster. Okay, he actually retired at age of 31, so a bit older than me, but he implemented a very similar strategy of buying a good company at a discount. Okay, and right now he's basically living off just by the dividend of the stocks, but he bought it way back then, right? It's probably 20 years later, but it's very easy to read books, very thin, very easy to read, not a lot of numbers, but just get you into it, right? It's a very good introduction. I would suggest anyone to read that book. If someone's really in the area, they want to borrow my book, just message me in it. Just come grab my book. I have 2, so I can borrow it out. Okay.
Very cool. Now I think you also have a YouTube channel as well that you started doing. Can you tell us about that?
Right now is at 9.8 subscribers, almost 10,000 subscribers. I have 15 video. So when I talk to a lot of big YouTubers, they're like, Cody, you're nuts. Like, I never seen anyone who has 15 video and have the same amount of subscriber. You should really keep pushing for more video, right? But when I first started, I don't have an editor. I don't know what to do I don't know what camera to use. So I took a lot of course and try to figure out and just start doing it. I script every word out, right? And it's really a thing for me why I do YouTube. I was going to share personal finance, real estate investing, and stock option, right? So right now I only share stock option because I ran out of time, right? There's other stuff that, I only have 24 hours in a day. So I'm trying to, allocate my time, but I'm trying to get back into it. But the YouTube channel is really a way for me to share my thoughts, like for free. Like I'm not getting paid anything. Yes. Now that, YouTube pay me a couple thousand per month because I have a subscriber and constant views, but it's really for me to share my ideas and really keep myself accountable, because whenever I'm preparing those material, I'm actually ingraining all those thinking in my head again. And now that I put it out there, everyone can hold me accountable. That's what I said on that day, right? On that day, that's what I said. So I can go back and say, that's what I was thinking a year ago. And look where I am now, right? A lot of my thinking has changed. So it's really just to help more people and help myself as well. And then really practice the public speaking. Because at first like right now I can look at camera and just keep talking, right? But when I first started, trust me, like I'm sweating and I just, hi, my name is Cody. Okay, sorry, let's start over. And then my partner is like, don't worry, we can edit after. I was like, okay, hi, my name is Cody Yeh. Today and I just forget. And like, it's not like now, right? So I came a long way because of the YouTube videos as well.
The more, I mean, even if people for fun, you go back to podcast number 1 or 2, and probably in a year or 2, I'll be like, today was rough. But you keep improving because you keep doing it and you keep practicing it, and over time it improves, and the sound of your voice isn't as weird. Like the first few podcasts, I used to listen to them and be like, oh my god, I don't like how I hear and or how I sound. This is so weird. And then I'd be like, I say and people might just point it out, but I say a lot, and I say and then you start picking these things up and you're like, I hate those, edit them out.
Yeah. And then back in the days when I first started YouTube, right? First 15 videos, it's all scripted down word to word. But now I'm thinking of a better way is, now that I have a little bit more practice and more confidence, is I just going to prepare bulletin points. I'm just going to speak to it and then let the editor, I'm probably going to pay an editor and let him figure it out. Right. But that's an even better practice for me in case for bigger event, I can stand in front of hundreds of people, right? Where I ran my webinar last week, where it was 160 people. So I couldn't do that in day one, but it's because of all these practice, right? I cannot discount any of those practice, all those process to reach that event, right? So that's really what I'm trying to emphasize on. There's no really one thing. It's all these things, right?
Yeah, absolutely. Cody, you're an inspiration. I mean, there you have it. It doesn't always have to be just real estate or just stocks or just businesses. My job for you guys listening at home is to just at least expose you to the information. Am I doing stock options? I'm not, but I think Cody is doing a great job doing it, and that's totally cool. But definitely do your due diligence. But I think that there's some really neat things that you mentioned today. And if somebody wants to reach out to you, they definitely can. But before we get into that, Cody, we're going to do the lightning round. Are you ready to play?
Sure, let's do it.
All right, Cody, question number 1. What is your favorite real estate investing book?
Favorite real estate investing books? Wow, there's many of them. I read almost all of Don Campbell's book, and that's where I learned the fundamental analysis about real estate. Right? Talk about whether there's a noise and whether there is a real driver, right? And that's the same thing what I do in stock and option. In that news, what is the real facts and what is the noise that just gonna go disappear, right? So Don Campbell has a lot of great books. The most recent book I read that really good is called Money, People, Deal by Stephen Arniel. Unfortunately he passed away, but a lot of people think he has a really strong character. I don't know him personally, but he does put out a lot of good content. And I just pick up the book. I like it. I'm going to continue to read a lot of his other books and real estate as well, right? Because he's very similar to my place. He's very young, right? Very established, more established than me in real estate. So I want to learn from someone who has the same drive at such a young age, and not necessarily, agree to everything he says, but there's a different perspective and someone I can learn from, right?
Very cool. Question number 2. I don't know if you're a podcast listener, but if you are, what is your favorite podcast overall?
I don't have a favorite podcast. I like a lot of podcasts because they bring on different people, right? So I actually like to listen to podcasts. For example, I like to get on podcasts like yourself where you're not doing stock and option because the question, the tonality coming out from your answer and question, I know, the due diligence, the disclaimer, I'm very careful on that. But I like to listen to different people from different perspective because that's how it will stimulate my brain to think differently. Because I don't want to live in my own world and say, hey, stock option is the best, only real estate, small business, there's nothing else. Don't worry about Bitcoin, don't worry about anything. But I like to listen to different perspective, right? So I actually like to listen to people as a different opposite perspective.
Yeah.
So I don't have a favorite podcast. I tend to listen to a lot more US podcasts because a lot of time, they have a totally different perspective, totally different market, totally different strategy. And a lot of time I like to listen to those and see if those apply in Canada. And then there is my blue sea, right? If everyone's listening to Canadian podcasts, no one knows about that strategy. I could be the first one to tweak it and to make it work. And I'll be the first mover advantage, right?
Yeah, that's well said. Question number 3, what do you do for fun aside from stock trading or real estate?
Um, so I'm very active actually. Before the COVID thing, I started hockey 4 years ago. I never played hockey in my life. Like hockey's not a thing in Taiwan, right? Where I came from. So I like to play hockey when I was working at Honda. I snowboard in the winter. This summer, I'm trying to get into more golfing, more tennis, and more car racing. Right? I know we're talking about that off record before the recording. Let's see if that happened. Let's see if the COVID's over and I can really go out and have some good instructor line up and just sit right beside me and teach me the rope, right?
Yeah, absolutely. Question number 4, if somebody has $50,000 and they want to get started, how do you recommend that they do that?
I think $50,000, if you really, really want to buy a real estate, you can come up with so many creative ways, right? Team up with your friend, team up with your family, or anything like that. But if you're not educated enough, maybe you should first at least read some books on it, right? I already said some of Don Campbell's book are really good, right? Maybe Sarah Larby, I know you were writing one. Maybe at that time it'll come out, maybe. And really get yourself educated. A lot of free content out there. Okay, not all of them are right. A lot of people sharing those free content don't actually do it themselves. Just to make sure you do your due diligence as well. Make sure those people are actually doing that and becoming successful because of that, right? So get educated, read books, attend a lot of seminars, a lot of Zoom. Everything's on Zoom. Everything is so cheap. You can pay $10 to sit there for 3 hours and soak up from a lot of experienced investor, right? So no better time to learn than now. Now, on the flip side, of course, because on the selfish, I offer a course. So I want to talk about the course. But here's the thing, though. I've seen so many people try to say, I could go free content and then for months, for years, they actually didn't take action because there's always something lacking, especially at the execution side, right? Even like Sarah, you run your own, last year when you were bringing your clients out to do the BRRRR, do the on-site, walk them through all signing contract, financing, all that, right? A lot of people have the knowledge, but they need a hand holding. And that's what your course is providing. And that's what my course is providing for stock option, giving people that confidence and that community and that hand holding and the accountability to help them become successful. So if they're serious, a lot of time people say, why is your course, where Sarah, same thing, or why is your course so expensive? But all the student, I'm not sure about your student, but most of my students, Cody should have raised your price, right? We made back the money in a month. And I say, that's what I want to hear because I give them the confidence, I hold them accountable, I push them, right? And they can fly. Now they can fly, right? So I want to see that. I want to see others are successful. And that's how I define I am successful. There's no point in me making all the money. And I say I can make it. And then everyone who took my course can never make the money, right? I don't want anything like that related to my reputation.
All right, Cody, last question in 20 seconds or less. If you lost all of your money and your assets tomorrow, how would you start again?
Good question. If I get to keep my reputation, if I get to keep my brain, everything in my brain, I will actually, I will not find a job. I will just start building because it's free to build a brand again, right? To have a YouTube, as long as you even have a phone, you can start by giving out good content, right? Build that reputation, build the branding, and then attract money, and then help other people make money and you will make money, right? You make less, but hey, there's this famous saying where you rather get half of the watermelon or get the whole grapes, right? So if I have to start all over again with the knowledge, reputation I have, I'll just keep doing what I'm doing right now, right?
Awesome.
Getting on more podcasts.
All right, Cody, where can my listeners reach out and find out more about you?
So I have a website called codyyeh.com, CODYYEH.com. And then I have sent you the links where, I have some personal links to my YouTube channel, to my free stock and option Facebook group. Right now, there's around 2,500 people in there, right? And then you can find a lot more information on my website. You can add me on Instagram, Facebook, just stay connected, right? Keeping it real.
All right. And can you spell your name so people can find you?
Yeah. So it's CODY. That's first name. Last name is YEH. So my website is codyyeh.com.
Cool. Awesome. Cody, thank you so much for being on the show. It was a pleasure having you on.
Thank you.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?